Are real estate prices going to crash? Are interest rates going to 10% or more? Is this the end of the Canadian bull market? Hi friends, my name is Fahad Khan and welcome to my YouTube channel. It's a new channel, but we'll be talking about real estate, the stock market, and entrepreneurship. There's a lot of fear in the market right now that this is the end, but don't let the negativity bog you down. It's the media's job to get into your head, to really spur negativity, and to really make you think that this is it, this is the end. But as long-term investors, we need to focus on the fundamentals. What makes investing in real estate so great? Let's talk about what makes investing in the Greater Golden Horseshoe area one of the best. It's my favorite area to invest, and I'm going to share why. But first, have you tried saying Greater Golden Horseshoe area really fast? It's not easy. So what exactly is this Greater Golden Horseshoe area? Well, it consists of the GTA. It goes all the way up to around the Barrie area and all the way west to Kitchener-Waterloo, and then also includes St. Catharines and Niagara Falls. I'm just gonna call it Southern Ontario to keep it simple. And did you know that it makes up a quarter of Canada's population? Comment below. Are you investing here as well? Let me know, I'd love to hear. Now let's get into why I think it's one of the best places to invest and why I think in the long run, property values are bound to go up. Population growth. There are current policies in place for years now that the government wants to bring people into Canada. It's one of their biggest mandates. And in fact, Canada would not be the country it is if people did not decide to make Canada their home. Immigrants do a lot. They account for a third of all business owners. They help create jobs, they help with the aging population, and they also are crucial in fulfilling the job requirements for this country. Without immigration, Canada would not be the country it is. In fact, it would be a declining economy. And the targets set by the Canadian government for these their immigration targets, they're massive. At approximately 500,000 people per year, that's the size of Hamilton coming into Canada every year. And 2/3 of those people decide to make Southern Ontario their home. If we compare these immigration targets to, say, the US, Canadian targets are so much more. And it really shows the impact and importance of immigration to Canada's population, economy, and the housing market. Now let's get to reason number 2, which is the Greenbelt. The Ontario government has artificially limited supply by creating this Greenbelt around Southern Ontario. As you can see on this image, you can see Southern Ontario, and around it is all this greenery. You may be thinking, why don't we just cut down the Greenbelt, get rid of it? That way we have more space to build and can build more homes. Well, it's not that easy. The Greenbelt protects farmland, wildlife, and forest, and has many other benefits for the environment as well. It's not just as simple as cutting it down. Even if we didn't have to worry about that, we've still got urban sprawl. Urban sprawl is when you just keep building outwards. So you've got big homes, you keep building out, you build more roads. Now the issue with that is if we kept going outwards, it actually increased costs. You've now got to imagine 1 kilometer of sewer or roads that only serves, let's say, 10 people. But with the Greenbelt and more density, that 1 kilometer might serve 100 people. So instead of the government spending money on roads, sewer systems, grids, and so on, we can actually spend that money elsewhere. Imagine what the cost of building would be if we had urban sprawl. It would actually make development super expensive and likely not possible. And now you might be thinking, well, one day someone's gonna come around and get rid of the Greenbelt eventually. Well, there's always a possibility, but it would be political suicide for them to do so. It would be the end of their political career. Nobody wants to vote for someone who's going to get rid of a Greenbelt that's going to make the environment worse. Now, we might not be able to build out necessarily, but we can still build up. But let's talk about the actual pace of construction. As you can see, based off of this report the Smart Property Institute put together, Ontario needs approximately 1.5 million more homes. This is based off of our current housing shortage and the projected population growth over the next 9 years. The government is doing what they can, but based on history, there's never been a time where they've been able to build enough homes that we need. And the latest forecasts show that there's plans to build 1 million homes. But based on the article and the report that we just looked at, we're short. We need 1.5 million. And so we have a shortage of housing being built. And based off of the rate hikes that we've been getting this year, a lot of home builders have actually paused the development and construction of new homes. So that gap that we were talking about, that gap is likely going to be even bigger in the future. And this is actually a great opportunity for investors like ourselves, where we can take existing housing stock and convert it into 2, 3, maybe even 4 units. Now, not all the policies and bylaws are in place to let us do that, but slowly it's coming there. There's many options, but it's an opportunity for us. So what does all this mean? Well, if we break it down to simple economics, it's a supply and demand issue. We've got more demand than we have supply. We've got a shortage, and so prices go up. All of these factors really put a floor to the prices of real estate in Canada. We're not building enough, and with all these people coming into the country, I really don't see the prices crashing. In fact, we had record immigration this year. One of the main differences between 2008 and now is the change in demand. We didn't have the demand that we do now back in 2008. And so that really impacted real estate prices. And I don't think we're gonna see that this time around. Banks have also learned. So when we were giving out those mortgages over the past few years, the banks made sure that people could continue to afford them even if the rates went up. And as long as you don't need to sell, I think you'll be fine. Let's talk about the Bank of Canada. They're expected that they're going to continue increasing rates until late into 2023. And if inflation continues, they've said that they will continue to raise them. I think going forward that the rate hikes will have minimal impact. Higher rates have already been accounted for housing prices. They've already been accounted for in the mortgage rates. And one of the main things that we're not seeing in the market right now is buyers. There's a few buyers, as a lot of them are sitting out. And we've seen this happen multiple times in the past. Whenever the government has intervened in something, whether it's increasing rates like they did in the past for a little bit, it really interfered with the buyers and they just decided to take a pause. And that's what we've seen for the most part of this year. And as buyers get accustomed to these new rates, I think they'll finally step back in and be like, okay, enough is enough. It's time to get back out there and time to buy. The next rate hike is just around the corner. There's different mindsets that maybe we should wait until the rate hikes stabilize and they start cutting them again. I think there's opportunity out there right now. I've started looking for investment opportunities, even though I'm being super cautious, as I think there's still risk in the market. And so I'm looking for something that's really discounted. Make sure that there is significant buffer in what you're buying. One thing I'm doing is seeing what the impact would be of a higher interest rate. So for example, if I'm looking at a flip or a BRRRR opportunity, I'm gonna think about, okay, this is my ARV based off of the last 90 days or so, but let's take that ARV and assume that interest rates are higher. What would the new ARV be then? That's kind of the math that I'm doing to make sure that there is enough buffer in my numbers. And the best case scenario is if the interest rates don't go that high, well, that's extra profit for me. And if the interest rates do end up going that much, I've already accounted for it. And I'm only looking at deals that'll make profit even in those situations. And if you're a long-term investor, you're just looking to buy something and you're gonna rent it out to long-term tenants and you're gonna hold it for 10, 15, 30 years, then honestly, the rates don't really matter. As long as you're buying something where you're cash flowing from day one, then it doesn't matter. Down the road, interest rates hopefully go down. Even if they don't, you're still cash flowing. And in the long run, rents will also go up. So that cash flow should increase. And you might be thinking that interest rates are just gonna keep going up and that it's not the right time to invest. Well, I think they will stay up, but I don't think they'll stay up for long. The real estate market makes up too much of a percentage of the GDP in Canada. And also, the government can't afford these higher interest rates. If you want to get into the market, now is the time. I haven't seen a better buying opportunity in the last 24 months. And I think really soon, we're going to see buyers jumping back in. So get in before all the competition starts again. I strongly believe that in the long run, real estate prices, especially in Southern Ontario, are going to continue to increase. So what are you waiting for? Get out there and start looking for opportunities. Otherwise, I'll see you next week. Bye for now.